Hey guys, welcome back to my channel. My name is Ashton Palmer if you are new here, and I am a real estate agent here in New York City, but I also like to dabble in real estate investing as well. So one thing I wanted to talk about with you guys is something that you've probably heard of before, but have no idea what it even means or what it entails, and that is creative finance. Now just keep in mind that as I learn more and more about real estate investing and different strategies to do so, my goal is really to share them with you guys, and so we can all learn and grow together. Again, whether that's on the real estate investing side of things, whether that's on the real estate sales side of things, or even just life in general. Again, my whole goal here is just to share as much as possible so that we can all get better at this thing called life. Now, like I mentioned, one of the things I want to talk about today is creative finance and really what it is. And you may be thinking to yourself, hearing creative and finance in the same sentence doesn't really make sense. You're not used to thinking of finance being super creative, but you can get creative in finance, and that's one thing I want to show you guys. So let's just start off by saying that, most people, when they are thinking of purchasing a home, whether it's going to be a rental property, maybe a primary home, an Airbnb or Verbo, assisted living facility, maybe a sober living facility, in order to own the property, they think they have to go buy the home and apply for a loan in order to get financing. They got to talk to a loan officer, they got to show you their taxes, they got to pull your credit, everything else that usually comes with applying for a loan. However, creative finance is literally a way to buy a home without having to do any of those things. With creative finance, you don't need the 3 big C's, which are cash, credit, or credentials. This makes buying a home and building a portfolio way more attainable for people who don't have hundreds of thousands of dollars laying around. Now, what's great about creative finance is that you can literally go directly to the seller or even to the agent that's representing the seller if they are marketing it on the market, and offer to purchase the home through either seller finance or purchase it subject to the existing debt that is in place. Now, what's great about this is it can really help the seller get out of the situation they are currently in and really help them move on to the next phase of their life, especially, if the home is having a hard time selling on the market traditionally. Now, obviously you may be thinking, okay, well, what's the difference between seller finance and subject to? And I can definitely dive in further around the differences of each in another video. It'll be too much just to dive into this video. So definitely make sure you subscribe for future videos if you are interested in that, of course. The great thing about creative finance for a seller is, like I mentioned, they're able to move on to that next phase in their life, especially if the home's not selling traditionally on the market. But really, it's an opportunity for sellers to actually get the price they are looking to sell it for, because generally an investor will come in and they will be open to paying, for instance, the asking price if the seller is open to working out and structuring terms for that investor to buy the house on. And if that's the case, there is definitely an opportunity for a deal to happen. So in order for this to really kind of hit home, I wanted to just provide you with a quick example and kind of write it out on my iPad. I know me personally, I'm a visual learner, so maybe this will help some of you guys. But for instance, I just recently closed on a deal that I structured down in Clearwater, Florida, and the seller had tried selling their home traditionally on the market, and they didn't have any luck for whatever reason. And with this seller, it was very important for him to sell because he was hoping to move to Texas to move on and be with his family because they ended up getting a job there. So he had his home on the market with an agent, and it had a hard time selling, so he ended up delisting the home and was trying to figure out what his next steps were going to be. So I called him up. He let me know again that it was on the market for $300,000, and he is still open to selling it, of course. He let me know he currently had a mortgage in place for $230,000 with a 3.1% interest rate. So immediately I got excited because those are the kind of interest rates that we are really looking for right now. Obviously, at any point in the market this year or even last year, where in the world could you find a home where you could get a 3.1% interest rate? I'll wait, because you are not going to find that unless you purchase a property this way. So again, he had that 3.1% interest rate, and I asked him, I was like, hey, listen, I understand you want to move with your family to Texas and move on to that next stage in your life. What if myself or an investor were to come in and take over your current mortgage payment for that $230,000 mortgage, so you're no longer responsible for it, and then we structure something on your equity. And he said, honestly, I'm pretty open to that. He was actually pretty familiar with creative finance and how it works, so it really made my job a little bit easier when it came to explaining everything. So he's like, okay, yeah, feel free, go ahead and take over the payments for my mortgage. And yes, this is legal. Again, we can dive into the legality of all this in another video because it is a very important topic to discuss. However, I don't want to blow you guys up with so much information right up front and just get you confused. So just let's keep it simple. I'm taking over the payments on that mortgage. So that leaves $70,000 in equity, right? So that's the question that a lot of people have. Well, if you were to take over the payments, what about the $70,000 in equity he has? How are you paying him out on that? Now, as an investor, generally, we want our entry fee or our down payment to get into the deal to be under 10%. So if I want it to be under 10%, 10% of this purchase price is $30,000, right? I told him, I was like, listen, we would be open to giving you a down payment towards that $70,000 of $20,000 up front. Because what I realized from him is that he did not need all $70,000 up front in order to move on in his life. Again, one of the most important things to him was, for one, not having to be responsible for these mortgage payments anymore, and being able to move with his family, to move on to the next thing in life. And he also didn't want to be a landlord. He could have rented this out if he wanted to, but he didn't want to be. Being a landlord is tough at times, and a lot of people are just not up for that. So we gave him that $20,000 down, which left $50,000 remaining in his equity. So what we did is, you have your mortgage here, which is in first position, right? That mortgage is the first thing to get paid off if the house were to sell. So what we did with this $50,000 is we actually put it in second position and created a second note. So we now have a monthly payment to him on that $50,000 each month, and it came out to like right around $200, if that. So it was like $200 plus the mortgage payment, and whatever that amount ended up being, I don't have it off the top of my head, but it ended up being less than what we could rent it for on a long-term basis. So there we had a cash flow deal. We could get a mortgage at 3.1% in today's market, which is crazy to even comprehend if you didn't know anything about creative finance before this. And we didn't have to get qualified by the bank. We didn't have to show our credentials. Okay, there is cash involved, but if we wanted to get even crazier with all this $20,000 down payment that we gave him, we technically could go to a private money partner, go borrow this $20,000 and make payments to them, and add that payment on top of these three payments. And as long as that is under the monthly rental payment and you're still cash flowing, that's zero cash down. I could get so crazy with all this, but I'm gonna try to keep this simple. And sorry for all this chicken scratch on this iPad right now. But as you can see, we were able to help him move on to the next stage of his life. He got to keep his equity instead of having to pay out closing costs. We are paying him out monthly. We actually put an interest rate, I think, of 3% on this payment that we are making him towards his $50,000 in equity each month. So he is making a little bit extra on the $70,000 in equity he had in the home. So it's a win-win for everybody. He's protected by putting certain things in place in the contract to make sure that if we were to ever default, the deed would transfer back over to his name, which again, we can dive in a lot further on all of that. But the most important thing again to know is that we were able to help him move on. We were able to get a property with a 3.1% interest rate and something that cash flows, and we can use the appreciation, the depreciation, the cash flow. There's a bunch of different benefits as to why an investor would want to purchase this. And let me be honest, I ended up not keeping this in my portfolio. I'm still trying to define exactly what I want my portfolio to look like. And with that being said, I actually assigned this deal to another investor who really looks for these kinds of deals, but he doesn't have time to find them himself. So I structured it and was able to assign it to him, and he took it over, which I have a handful of investors that I work with down in the Tampa, the St. Pete, the Clearwater area, and Orlando, that the minute that I find a deal like this and I'm able to structure it, there's people right there that are open to assigning it and closing on the deal. So if you are an investor and you're wanting to see more of these deals, just make sure you subscribe or you join my buyers list down below, and I will share deals that I get with you to see if it's something you'd want to invest in. But also, if you're a seller that's watching this, or even a real estate agent, and you're having a hard time selling a property that you're working on or a property that you own, feel free to reach out to me. Would love to try to structure something with you to get you to where you want to go when it comes to your property. I'll be honest, I wish I could do these kind of transactions in New York City. However, it's difficult with condo boards and co-op boards here, just with the oversight. However, when it's a single family home, at the end of the day, it's up to the owner whether or not it's something that they would want to do. So yeah, thank you guys for watching. I hope you appreciated this video. I hope you got something out of it. If you did, please drop it down below what you learned, and I'm sure you guys are going to have a lot of questions around this. And again, I'm going to be making a lot of videos around what I'm learning in the real estate investing world, especially in the creative finance side of things. So please drop your questions down below. I will definitely try to answer them over time and as I make more of these videos and as I learn more, of course, as well. So thanks again for watching, and I will see you guys in the next one.